We're seeing green pretty much across the screen here. Take a look at the major averages popping on former President Donald Trump's victory. We want to dig into how you should think about your investment strategies for a Trump presidency. Here with more, we've got Arup Datta, who is the head of Global Quantitative Equity at Mackenzie Investments. Great to have you here with us, Arup. So first and foremost, as you think about your investment strategy post-elections, what more broadly can perhaps be applied across any election scenario, and what makes this one different?
Absolutely. Thank you for having me, Brad. My pleasure being here. I continue to be sanguine about markets. That's how I've been for the last couple of years. It's no different today. Obviously, the markets are running, as you could see. Small caps leading the way currently. So my view on being positive on the markets remain, and that's playing out today. I've also looked at how markets have behaved based on election results in different parts of the world, and I would say U.S. is the one market perhaps where the president or a new president or a new election plays less of a role about the long-term returns for the markets than it does in some other markets. So therefore, I continue to do what I like to do best, which is try to be very all-weather core in terms of how I invest my money.
What does that mean for folks who have perhaps dove headfirst into the Magnificent Seven, for instance, and really over-allocated or overweighted their portfolio in that investment thesis?
So I'll answer both of those. All-weather core to me is you have all styles embedded in your process, which means you have value in your process, you have growth in your process, you have quality in your process. And I try to keep my life simple, because I can't always predict which style will be in favor today, tomorrow, or the next 6 months. So having all the three styles in my process where my portfolios have positive value, positive growth, positive quality biases help me out in terms of navigating different market environments, which has really served me well the last 6-7 years during so many massive macro events going on here. So that's one thing, has always I focus on. I would say about the Magnificent Seven, that's always been the talk of the town the prior 18, 21 months. My view is, again, I would like to pivot a little bit away from that, not a lot, but a little bit away, because my view is as the Fed starts cutting rates, it already has, another one likely to happen this week. In this situation, historically, value has performed well. We haven't seen that yet. So far, the last 21, 22 months, last year, this year, growth has led the way. Usually, as Fed starts cutting rate, value starts leading the way. So I would say one needs to take those into account. Usually, value starts leading the way. Small caps have a better time. So therefore, what I've been telling investors is, you may have done very well by yourselves by picking M7, the Nvidias of the world, but going forward, at least balance it out. Load up a bit more on US small caps, perhaps somewhat internationally.
Arup, just lastly, while we have you here, and we were talking about the Mag 7, of course, Nvidia, one of the major names within there. That is one of your top picks. What are the other top picks that you are looking towards as we see a shift in the balance of power, or at least the powers and the heads within Washington, D.C.?
Absolutely. As I said, I balanced my portfolio. So I have Nvidia based on its growth metric. It still ranks very highly. That's why we own it. But the other two picks I'll highlight is Comerica. That's actually a value pick, a mid-sized bank based out of Dallas. And the last one I'd like to highlight is Norwegian Cruise Line, which everyone knows is one of the major cruise providers. And both of those, they're different reasons. So when we're looking at banks like Comerica, we emphasize value more, and Comerica looks very cheap on many measures like price to book and dividend yield. For Norwegian Cruise Lines, both value and growth seem to be good support. They had a blowout print a few days back. Cruise demand is very high. At the same time, the stock is cheap on measures like price to cash flow. So again, my portfolios will include names like Nvidia on one hand, Comerica on the other hand. That's where the all-weather core approach.
All right, Arup Datta, who is the head of Global Quantitative Equity over at Mackenzie Investments. Thanks so much for taking the time.
Thank you.